All right. Welcome back. Today is Monday, August 1st, 2022. And today has been quite an eventful day, as you can see here, $350. Um, Most of that being on MGAM with a small little portion being on GOVX. So we're going to go over those four trades I believe I took. I took four trades today. Or no, I took five trades. We're gonna go over those and break them down for y'all so you guys can get a better picture of how today's trading went. I know I'm supposed to be in trader rehab, making about 15 to 20 bucks a day, but when you get momentum like 2020, when you get 2020 momentum, then you gotta kind of hop on the train. You can't really limit yourself during those times. Especially when the only reason why I'm in trader rehab is because I averaged down. So it's basically I didn't average down today, so I'm able to hmm. The reason why I got out of trader rehab today was because of Friday's momentum. I wasn't able to trade on Friday afternoon because I was working, and so but I still watched the charts. I still watched how they moved, and it looked very similar to 2021, 2020, and because of that, I knew that if that momentum spilled over into Monday, which it did, um, I would be jumping on that train because I'm not going to miss another day like that. They don't come around often. Now that it's 2022, we get one or two of those days a month, maybe every 2 months, and so when they come, you have to be capitalizing on them. Those are the days that make you, I mean, they say 80% of a trader's income comes from like 5 to 10 days of the year. So if you're not trading those days to the max potential, then you're missing out on a big portion of your income as a trader. So today, and the thing is back in 2020, 2021, yes, the markets were hot, but I was a new trader. I was not able to capitalize on them at all. I was actually red those years quite significantly too. I was dumping money into the markets. And so once I'm now 2 years in almost, if I get a day like 2020, 2021, I can actually capitalize on it. And that makes me feel really good as a trader. So let's break down these trades. We have GovX. Actually, let's go MGAM. MGAM first. MGAM. All right. So here's my chart on MGAM. Let's scroll in and zoom in. There we go. Let me actually pull up the TD Ameritrade chart so you guys can see it more clearly. Let's go like this. All right. So, MGAM, we had a pre-market pivot of 1969, or we had a pre-market high of 1969, and then a pivot at, let's see here, around 1820. Now I was watching this for the opening range breakout, so we got this opening candle and it dipped down, and it kind of double bottomed here. Slightly broke the double bottom, but it double bottomed and then it reversed and ended with a bottoming tail green candle on high volume compared to pre-market. Like pre-market, there was like 18,000 shares per candle, and then first minute of the day, 250,000 shares of volume. all in that bottoming tail green candle, which shows that that's a bullish indicator that this will probably at least get back up to the pivot level of 1820. So I take my first entry there at so we open here flat, or flat from the close of the next candle, or the previous candle. We dip down for a moment. I buy that dip. I believe I put 300 shares in. Pretty hefty trade. It might have only been 200 to start, but it was 2 or 300 in that first entry. We got the rip up to 17, break of 17. On the break of 17, I sold a quarter or a third, and then I hit still a third again. So I sold a third and a third, so about half my position. On the break of 17, we had already hit 17.20 almost, and then we pull back to 17.5. And then as the next candle opens, we dip down again below 17, hitting our VWAP, our 9 EMA, our 20 EMA. I buy the dip again with another 100 shares. This time I'm holding. We get that bottoming tail again right there. Let's see here if I can scroll in for you. So we get a bottoming tail again, and then I go ahead. So I bought the dip there. Hold this right here because this candle didn't break this candle's high yet. This candle's high was 45. This candle's high was 25 or 17.25. And so the next candle opens, and as we break 17.25, I'm looking to take profit on the break of 17.40 for the move to 17.50 and break of 17.50. So I took a little bit of profit at 17.50, and then added back. That was a pretty aggressive add, actually. It might have only been 50 shares if that was that kind of an aggressive add. Ooh. Let's see. That was at 17. That was at 934. 1790. Let's see how many shares that was. 1790. Oh, it was only 24 shares. Okay. And I was buying for the break of, right? That looks like, yeah. So I was buying the break of 18. My order was at 1813, and I bought the break of 18, and then sold it just a second later at 1820 and 1859. Wow. Oh wait, no, 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 no. That was this. That was this buy right here. 1 second. Let me go back a little bit further. Okay, so I bought 31 shares at 1798 for the break of 18. Sold at 1807. 1820. Yep. Then again, we got another dip. Bought the dip with 24 shares. At this point, I'm running out of buying power, and well, I'm not running out of it, but I am trying to preserve the profit I already have. I think I was already up at that point. I think I was already up around 180. It might have been more just because most of the profit was in the first 5 minutes. It probably was around 200 actually. Around 200, right around here. So I bought the dip, sold 72, and then again buying the break of this. So this candle had a high of 19 or 1810, and this candle had a high of 1788. So if we broke 88, we could look for the break of 18, and then with the break of 18, because of how the stock is moving, it's most likely going to break 1810. Once it breaks 1810, we have 1825 and 1850. So you can see my sells here are at 1822, 1848, 1866. Yeah, so I'm selling on that break of 1850. And then another sell here up at 19 once he broke 19. 1911 is when I got that sell right there. Um, from there, I had pulled back most of my position because as you can see, I'm only selling 9 shares right there. And that's like a quarter of my position. So I was only holding like 36 shares at that point. From there, I sell another 7 shares here at 19. And then we look to buy the dip again on this pullback candle. The next candle opens, it dips down a little bit lower just to touch the 9 EMA. And then I bought the bounce on it for the move back to the highs. I sold most, let's see, this was 1880 buy, canceled buy, canceled buy. So 1897 is where I got filled, 40 shares. And then, oh no, that's not the right one. Bought 23 shares, 1889, and sold the rest, 94, just to get out of the position. I think what happened was I accidentally hit buy instead of sell. I was trying to sell the remaining shares here. This is not supposed to be a buy. So this arrow right here was supposed to be a sell. I accidentally doubled my position and then sold for a small profit on the next second because I realized I had bought. Um, yeah, so at least I was doing that with like small size when I did that accident. Um, so from there, I get out of the trade. So I was in it pretty much for this entire move up. And then this candle, I'm out of the trade. I'm not in the position. Pullback candle, pullback candle. I buy the dip here, thinking it's about to make another bull flag up. But we actually, so we hit the 9 EMA, and then we dip lower on the next candle. We actually broke the low of this candle, which technically indicates that it's going to be a longer pullback. But yeah, so on the next candle, I just get out of my position. I think I was only in 40 shares, and this was an $18 loss. 45 cent per share loss on 40 shares. So that was an $18 loss. This was a $327 win on this first 7 minutes of the day. And then we get back in here for the break of this ABCD pattern. Look at that right there. There's a pivot right here at 1934. And then highs are at 2011. So we had 1934 is what we're going to look to get in. We punched the buy button at 1934, got filled at 1934 exactly, and then rode this. This was with 40 shares as well. I wanted to pull the share size back since I was already up so much. And I have a tendency, or at least I used to, on big days, I would have big upswings and then big downswings. And so I was just making sure I was preserving capital at this point. So I got in at 1934 and then out at, let's see those exits. 1934 buy right there, out at 64, 87 on this candle. And then the next candle opens just a little bit lower at 78. It continues to push higher. So the high of this candle was 1996. It pushes through 1996 really fast. And it breaks 20 and 2011. So it breaks high of day. And as it broke high of day, I sold at 2030 right here. And that was half or a quarter of my position of my remaining position. And then, so that was 5 shares. And then it's 2072. Wow, that's like almost a top tick on that candle. 2072 is where I got my last shares out. Or no, it looks like, actually no, it looks like I got another quarter out at 2072. And then the remaining 13 shares I was holding, I sold on the way back down to 1985. And I did this because with a wick this big, almost a whole dollar per share, and then now it was coming back down to its entry, that's a topping tail. Even if it closes right here, it's very bearish. So even if it closed up at 19, it would be bearish. But I get out my 13 shares, and then it proceeds to, over the next course of 20 seconds, it proceeds to flush down to 1850. Or actually, no, this actually goes all the way down to 18. So from 21 almost to 18 in one candle. $3 per share. I mean, imagine if you were buying this for the halt level. The halt level was at 2088. Imagine if you were buying to go into the halt, and then it just flushes 3 points on you. That's insane. What is that? 3 points on a $21 stock or on an $18 stock? It's like 17% flush. Commissions for today? The commissions, they shouldn't be any. I'm trading at TradeZero, so as long as you're not trading anything that's under a dollar, it's commission free. Um, so that 350 you see is pretty much all pure profit. There'll probably be like 50 cents to a dollar of SEC fees and just like regulatory fees, probably like a dollar of regulatory fees, but that's pretty much pure profit right there. So, yeah, I'm very glad that I mean, a day like this at CMEG would be, or at CMEG, that would be like uh, $150 after commissions. But because I'm not trading at a commission broker anymore, I'm actually keeping 99% of the money I'm making. Yeah, it's pretty great. Um, so yeah, we get that huge flush, and at that point, I'm like, I have like $1,200 left of buying power. Or no, I had $3,000 left of buying power, and I was like, I could keep on trading MGAM, but I think I've pretty much squeezed out the easy part of the trade, because right, that was all uptrending. Once we get that flush, we're gonna be going into a chop fest, and I do not want to be trading a chop fest on a $19 stock. That's something I've never done, and I don't want to get comfortable with it right now. I mean, you buy 1850 and it's up to 1920, and that's your range, a 70-cent range. I'm not comfortable with that when it's just range bound. Um, so I stopped trading MGAM on the day after that. That was my last trade. Right now it's just kind of bouncing around VWAP, which is at 18. It's going down to 1690, going up to 1890, and then coming back down to 18. The other two trades I have on the day are GOVX. Pull that up for you. And these were pretty much, I had one good trade on large-ish size, around 300 shares. And that was down here for the break of VWAP. So we were consolidating down here. So we pushed down through VWAP at the open, attempted to break but failed, couldn't get above VWAP. Came back down. We couldn't break the low of the previous move down though. We actually double bottomed here at 375. And I took that as a bullish indicator for the move back to VWAP. So I got in here at let's see, where is it? 389, 398, and 387, and 384. So I got in with an average of around 390. And then my first take profit was at 94 or 93. Second one was at 90, or I added for the break of 4 as we were breaking VWAP, and then I took profit at 99, 98, and then I added at the break of 4 right here, and then sold my remaining position at 404. So that was a quick break of VWAP, break of 4 setup. And then from there, I got another, this one's a loser, but I bought 413 for the break up. At this point, I was up 380 or 379 on the day. And so I brought here, this trade should never have happened. I was, the only reason I got in was because I wanted to have a $400 day. It was not really any technical reason. I mean, there was like a small technical reason, but I really just wanted to see a $400 day. I was at 380. I was $20 away. I just needed 10 cents per share on 200 shares. And that's not a reason to take a trade. So, of course, I get punished for it. So I got in 200 shares at 412, 413 for the break of this 1 minute candle high. And this candle had a high of 419, which was a double top with this high over here at 419. So I was looking for the break of 419, and then I would take profit at like 423, 10 cents above my current position, and then be done for the day at $400. Um, that obviously didn't happen, of course. I mean, I'm kind of glad it punished me because that was a stupid trade to begin with. Um, so I used my remaining buying power there to basically try and hit a profit goal. And so it ends up coming back down, and on the break of VWAP, I buy another 50 shares at 398. And then once it it came back up to 4, but once it couldn't break 4, I got out at 398 for the remaining position and took the 30 or $28 loss. So that was my day today. As you can see, I have pretty much no buying power left. And so tomorrow, when market opens, I'll probably have like, well, 180 plus whatever I traded on Friday. So probably like $300 to trade with. My buying power shows 179 because I'm using a cash account. So the second I use up that buying power, it's gone for the next 2 days. And that's why I usually only trade half my account every single day. So that, let's see if I can draw this out for you using like MS Paint or something. So when you have a cash account, if you have 10, let's say you have 10,000 in your cash account, on Monday, you can go ahead and use 5,000 of that 10,000, and then on Tuesday, you're gonna have 5,000 left to trade with because your first 5,000 isn't gonna come back into your account until Wednesday. So this first 5,000 takes 2 days to settle in a cash account. So it's gonna come over here. You're not gonna have it on Tuesday, but on Wednesday morning, it's gonna be right back in your account. So the remaining 5,000 that you have after Monday's trading, you can use that on Tuesday, but that's not gonna come back until Thursday. Right there. And so this is how a cash account works. You have, let's say your total account value is 10,000, but you're only allowed to use half of it every single day. And that's because it takes 2 days to settle. So you get your money back on 2 days from the day you trade it. So today I used around 12,000 of my $13,000 account. So because of that, let's see here. 12,000 of my $13,000 account. That means, or I used 12,500, but we'll just say 12,000, and then we'll put this is 13,000. So that means that money's not going to be back in my account till Wednesday. So tomorrow, I'm only going to be able to use like $500 probably, and that'll come back on Thursday. So that's pretty much how a cash account works, and that's how I'm going to be trading my account value until I get over the PDT level of 25,000. At that point, you can use your 25,000 repeatedly every single day, and that's what a margin account gets you. That's why everyone's always trying to get above PDT level, because doing a cash account, you're limited on the amount of trades you can take. Because once you run out of money, you're out of money for the day. I hope that makes sense. Am I profitable yet? Let's go ahead and pull up Trader View. Let's see here. Let's go on the year. So on the year, this is what my P&L chart looks like. Pretty sloppy. These first 3 months, up until March like 10th, I was trading with CMEG. So I actually went green my first month of the year, and then red my second month, right down to here, and then a little bit red on March. From there, I moved to TD Ameritrade up until May, and I was grinding on small like $10, $20 days. I had some nice $30, $40 days in there as well. And then from May till now, I've been trading at TradeZero. And that's when I got this move up, and then I was in trader rehab because of this move down. And that's because of my averaging down problem. So if I actually go and put, I have my trades tagged, but if I go and put not averaging down, oh god, I can't spell. Not average down. Basically any trades that I tagged with averaging down, they get taken out here. And then that way you can see that if I'm not averaging down, I'm actually up quite a lot on the year. But because of my averaging down trades, I'm actually losing like almost 2,000 just from averaging down. So if I go tag breakdown, averaging down is my biggest loss. It's like 2,500. Because when I average down, I'm bringing down my cost basis, but I'm also adding to my position size, and it's usually on a losing trade. So those are my big losses right there. If you want, I'm not exactly profitable yet. I would say I probably need a solid 3 to 6 months before I'm like I can say I'm profitable. I'm having more green months now than I did last year. So I had a green streak of 3 months here. Last month was a pretty bad red month, and then I'm hoping to make some back this month. So yeah, I would say I'm getting more consistent. The red weeks are getting further apart. I'm getting multiple green weeks in a row. That's awesome, man. Um, you're the only trader I can relate to that follows warrior trading. Yes, I was a warrior trading student for about a year, and then the cost was no longer worth it for me because I had my own scanners that I use. I can show you those right now. So these are the scanners I use. It's pretty much the same as warrior trading. It's just a little bit. It's probably got like a 10-second delay on them on the high day chart, and then probably like a minute delay on the halt chart. So it's actually pretty beneficial. I mean, I still get my gap scan right here, high day, continuation plays, halts. It's everything you really need for scanners. And I have that link in my description, I'm pretty sure. Just chartwatchers.com or chartswatcher.com. And then you can just make an account. It's free. If you'd like, you can get the pro plan. Look at that. It's perfect timing. The advertisement popped up. The pro plan's $99 a month, but if you use my code, Heaven with a D 40, you'll get 40% off. So there's that as well. And this just gets you ad free, so you don't get these advertisements. Um, you get unlimited dashboard time, and then you can also have multiple screens and windows. With the free version, you're limited to how many scans you can have on the window. So you can only have like 10 scans, I believe. So I have that for my scanners. And then let's see, you closed your CMEG account. What were you also facing a commissions issue with CMEG? Because for me, commissions were almost double what I was making. So even though like I had a $560 month, my commissions would be like 1,500. So I'd actually be red 1,000 after the month was over. Was that the same issue for you? Yeah, that was the most common reason people give up on CMEG. I actually don't recommend it at all anymore. I used to, but then it was like, um, a lot of people ask me why I don't trade with CMEG anymore. I really just don't recommend them as a broker because of the fee structure. People who are using them are usually trying to avoid the PDT level, but their account values are so small that commissions make up like 10 to 20% of every single trade you do. And that's just not a way to be profitable. It's already hard enough to be profitable when you're not paying commissions. So yeah, I don't recommend them at all anymore. Um, yeah, so we had a good month in June, only 4 red days. That's the goal. The goal is 4 red days a month. July we had almost double that. I think we did, yeah, we had double that. 9 green days in July, or 9 red days in July. Try experimenting with time and sales window and TradeZero. It's better than having time and sales in the level 2. Oh, really? So instead of doing this, actually pull up a time and sales. Let me see that. Where is that? Try and get to the console. Where is it? Okay. There. So you're saying, so what about it makes it better? Is it just, oh, okay. Are you able to do more like highlights with it? Let's see here. Colors, background color. Ooh. Am I able to do that with the regular one? Preferences, colors. Ah, okay. I don't need the exchange because I don't really use that. I don't need the time. Alright, no, I do need a time. I just don't need a type. Apply. Okay. And then the ones that are, oh, is this background color bid ask? Okay. I see what you're saying. I'll take a look at it after the stream. That actually seems pretty nifty. I'll take a look at it. All right. Thank you for that. You can change the font and highlight. Yeah, so with CMEG, I had my above the ask orders highlighted in like large green. Yeah. Yeah, you have a great day too. I'm gonna head off here. Those are my trades, my 5 trades for the day, and we did like a little bit of a recap of my year, a little bit. So, um, yeah, it was a very good day, and tomorrow I'll probably be back to doing a little bit of trader rehab just because I have only like $500 to trade with tomorrow. So I'll probably only be shooting for like $10 to $20 tomorrow. But yeah, and then we'll see how this momentum shifts the market mentality in the small cap world. So we got some momentum Friday today, and then we'll see what's going on tomorrow and Wednesday. We'll see if we can catch some more stuff. All right, I'm gonna head out. Enjoy the rest of your day. I'll be back tomorrow morning.